Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor, and in today's video we're talking about how to get paid to be rich and how not to pay to be rich. And we did a little video, didn't we, Nick, a couple of days ago, where we were shooting and we came up with a saying. What was it? It was...
Don't pay to be a millionaire, be paid to be a millionaire.
That's exactly what it was. Don't pay to be a millionaire, get paid to be a millionaire. And I'm going to talk about this in a minute. And we're going to do an assets and liabilities column. And we're going to break it all down for you. I think this can be really useful because we can do a balance sheet and a cash flow statement. In fact, I think we'll focus on cash flow in this video, Nick. So guys, if you haven't already given it a like, please give this video a big like. It massively helps me out with the algorithm. And if you haven't already subscribed, why not consider subscribing? Remember, with this channel, we never sell a course. We're not going to sell a course. We're just going to give it all the information free of charge so that you guys can make all the investment decisions. And remember, I'm not a financial advisor. I'm just some dude who's built up a few businesses. I've got about 3 million quid's worth of property. I'm buying all the time. I'm growing. I'm learning. And then I'm sharing all of that with you. So give this video a like, give it a subscribe if you haven't already, and let's get into the video and talk about how you can get paid to be rich rather than being paid to be rich. First of all, we're going to talk about cash flow, and we're going to first of all talk about two people who are equal in net worth. So person one, he has a £3 million house with a £2 million mortgage, so has a net worth of £1 million. Now that would also equate to a £7,000 a month mortgage plus bills. Now clearly that's a huge liability for this individual to be finding every month. Conversely, person two is pretty akin to me, to be honest. I've got about £3 million worth of property. I've got about £2 million worth of debt. I've got about £1 million worth of net worth in my property side. Now my net rental income is about £8,000 a month. So we have the same net worth, me and this individual, but I get paid to be wealthy, whereas he has to pay to be wealthy. And I think this is the massive difference. And this is why I want to focus today the cash flow side of your life, or the profit and loss if you're looking at it from a business sense, rather than the asset value or the balance sheet. So this is really assets and liabilities, right? Your asset is the house, your liability is your debt, and then your net is your £1 million over here. That's a balance sheet calculation. Now, what today I want to do is focus on the cash flow or the P&L side of things, and just kind of highlight that from an asset and liability perspective rather from a P&L perspective. So it's going to be a little bit different. So we're going to put assets up here and we're going to put liabilities up here. So Nick, you're going to help me fill this out, all right, Nick? So first of all, name me a liability that you think is quite a big liability.
Car.
A car, like it. So a car can be an asset and a liability. So let's say, for example, we bought a £50,000 car and we had a £40,000 loan on that. That would mean that that had a net balance for us of £10,000. But what that doesn't take into consideration, and I know too many zeros, I did have the right number of zeros, we'd have a net asset value of 10,000. But from a cash flow perspective, you're absolutely right. This is a liability. It's an asset, absolutely, but it's definitely a liability when it comes to our cash flow or our P&L. And how much is a £50,000 car going to cost us? It's going to cost you about £650 a month on a PCP agreement. It's going to cost you about £1,200 a month on a hire purchase agreement. So $650 a month, that's quite a chunk of money. Now that's just the car. Now we need to insure it. So we're going to have another £120 a month. How much do you reckon it is to insure it? Well, for me, it's quite cheap. How much was it for you to insure your car when you had it?
It was about that.
What, 1,200?
Yeah.
Was it really?
It was more, it was £150 a month.
Was it really? Your insurance was like £2,000 a year? Oh my God. Right, I'm going to put up for like an average person. An average person, I think, the insurance on that would be about £60 a month. And then I think fuel will be about £120 a month. And then I think you're looking at servicing, somewhere like £50 to £60 a month.
Tax as well.
Oh, tax. Yeah, again, probably another tenner a month, something like that. I mean, this is adding up, isn't it? Owning this car is adding up. So whilst if we look at it on a balance sheet basis, yeah, we got 10 grand over here. Actually, from a cash flow perspective, we're like minus, I don't know, 5, 10, 16, 17, 18, 19. We're minus £890 per month. Nearly £1,000 a month going on that one car. And that is pretty comparable to my E-Class Coupe, to be honest, somewhere in that region. Now let's talk about another big liability. What would you say another big liability would be, Nick?
House.
House. Probably the biggest liability you're going to have. Also, potentially the biggest asset you're going to have. So let's say, for example, we're going to talk about a house that you live in. And Nick, you were looking at some houses recently. What was the price of the house that you were looking at living in?
300k.
£300,000. Quite a big house, I guess, Nick. And what was the mortgage on that going to be?
200 something K within it.
285, I think. I think you said you were going to try and use a 5% mortgage.
Yeah.
So £285,000 mortgage, something like that. It might have been a little more, but somewhere in that region. So yes, we would have a net of 15k, but that's not the full story because we started looking at how much it was going to cost you every month, didn't we? So what were the liability going to cost you on that? I mean, again, there is an asset side to it. I don't want to be wrong and I don't want to misinformed. There, of course, is a net asset side, but there's a cash flow liability. So with this house, I think it was about £1,500 mortgage, wasn't it?
Yeah.
You got council tax, £250. Then you've got bills, another £500. You've probably got £2,250 in liabilities there, stacking up quite comfortably on that property, and it's very hard to get out of. You can't click your fingers like you can with rentals and go, actually, do you know what? I'm going to move on. Once you're outside of your contract with ASTs, you can go within a month or 2 months notice. I think it's a month's notice as standard, as quick as that. So renting gives you ultimate flexibility, whereas this, you're really tied down until you can sell this property. So this is a cash flow liability, and you can see we've only made 2 moves here, and already with just car and house, we're spending like well over 3,000, aren't we? We're spending 4,18211. So we're spending £3,140 a month. Already, we've only done 2 things. We've got a car, we've got a house. And you can see how this will start to stack up. So Nick, what would you consider other liabilities to be?
Kids.
Kids! Do you know what? Kids are a liability. I don't think we can quantify the price of kids on this. I don't think it'd be fair. Do you know what? Should we flip to the asset side and start talking about actually what I would consider pure assets, okay? So these, we're going to call these impure assets. It's not a phrase that's used anywhere else. I've made it up. Ignore it completely. Do not use it in normal language. But for me, these are assets. You know, from a balance sheet perspective, they are assets, but they have a cash flow liability to you. So that's the dangerous side. Now, assets, let's talk about what we consider assets to be. Go on, Nick. What do you think assets would be?
Investment properties.
Investment properties, absolutely. Now, let's say, for example, this £300,000 property, you had done this as a buy-to-let. Now it would be on our asset side. So the amount that you're paying on your mortgage is probably not far off what the rent is, and actually considering in Didcot, for example, I know a 3-bedroom house, 300k, will rent out for about 1,400. You could have the same outcome over there, and instead you'd have 1,400 per calendar month coming in over here. Now that wouldn't be your net cash flow, that's just the money coming in. You'd also have the liability, which would be the mortgage. You'd have the liability, which would be the maintenance, the voids, all that sort of stuff, but you would have it producing cash flow. So we could probably say that this would be a net 800 a month, something like that if you had a £300,000 house. Now I understand that the deposit would need to be higher, all of these figures would change, but that would be roughly where it would be. What other assets would we say? So investment properties, and as we know, I love investment properties. I've got quite a few. I've got 13, 14, something like that, 13, 14th on the way, 3.84 million, and that nets me about 8-9 grand a month, something like that. So yeah, that's a fantastic asset to hold. And as you know, Nick, did I rent or buy my last house that I lived in?
Buy.
No, I didn't. I rented it. You got me. You got me. I literally thought you meant it. No, I rented it, didn't I? And when my situation changed, what did I do? Got rid of it.
Yeah.
I got rid of it like that. It was so quick to save 7 grand a month, like that. I could click my fingers. So rental for me isn't dead money. It's really, really valuable because it means I've got flexibility. Investment properties, on the other hand, I want to hold these forever. They're going to pay me every month. So what other investments could we make, Nick? You know the other investments I have. What?
Is it ISA?
ISA, yeah, my ISA. So I have an ISA. At the moment, I've not got much in my ISA. I've only got about 20,000 in it. But that's going to return me 10% every year on average. Again, we know I use index funds and that's the average return. So, you know, on my 20,000, that's giving me what? About 180 a month, something like that. 2,000 a year. So £180 a month coming in from my ISA, and that's gonna be month in, month out. And as I make more contributions to that, the amount of money it pays me goes up. So these are stocks and shares, things like that. What other do you think, Nick? Go on. Getting more hard now, it's getting more difficult, isn't it? Because really, actually, when you think about it, there's only a couple of real classes. I would agree, investment properties number one, ISAs, stocks and shares funds would be the second one. The next one would be bonds, and I do hold some bonds. So bonds would be another one. You'd also have maybe, and I'm not going to say crypto because anybody who knows me knows I made investments in crypto in the past. Not big, but I've made a little bit of money in crypto, certainly not the vast majority of it, very small amount in comparison. But ultimately, I believe crypto to be a little bit of a bubble. Actually, I believe it's the biggest bubble ever, but that's a story for another video. I would include bonds. I would also include businesses that you build because they can pay you month in, month out without you having to go there, as long as they are big businesses. And I would say you probably need to have at least 100 employees for a business to be in that position, to be fair. So investments, ISAs, bonds, businesses. So Nick, what other assets do you think there are? Like we've got bonds, businesses, stocks and shares, funds, and investment properties.
What about objects? Like
Objects?
Jewelry.
Oh, right, you mean like, what do they call them? Collectibles,
yeah.
what's the actual word?
Oh, I know what you mean.
Oh my God, it's going to do my head in. You know what, you stand in front of a camera like this and then you forget everything. Like, it's like, in normal conversation, I just blurt it out. Anyway.
Antiques, is it?
Pardon?
It's not antiques.
No, it's not antiques, but I know what you mean, absolutely. So yeah, absolutely, you got like watches, jewelry, all that sort of stuff, gold.
Yeah.
Now, all of these sort of things, they don't produce a cash flow. Like my ISA, that gives me dividends. My bonds give me interest. My investments give me, properties give me rent. My businesses give me dividends. Watches give me nothing. Gold gives me nothing. Physical assets, that's what they're called. Physical assets. So I would class them as assets absolutely on my balance sheet, but on my cash flow statement, or my cash flow assets and liabilities, which is really what we're talking about here, these don't really have a place because they don't pay me month in, month out. Does that make sense? So I think you probably need to focus on those four as the things that you would invest in. Now, if you're building your career, there's no need to build a business on the side. You know, let's say, for example, you're earning lots of money with what you're doing. You just need to be funneling that money into investments, whether that's investment properties, stocks and shares, funds or bonds, whatever takes your fancy, that money can be funneled into there. Conversely, for other people, they might want to build a business. I think this is an incredibly individual thing, depending on everybody's personal circumstances. So Nick, have you got any other questions regarding assets and liabilities before we end the video?
No.
No, you're happy?
Yeah.
What do you think about all of this? Give us a sum up from Nick. Come over here. Come over here.
Oh, God.
Nick's going to sum up the whole video. Right. Sum it up, Nick.
What, from my perspective?
From your perspective, assets and liabilities, I think I've given my perspective.
Well, I think it's clear to see the two differences, you know, between this person and this person.
Absolutely.
I think this person will probably be doing more of these things.
Absolutely.
This person will be doing these things.
And which one would you rather be?
This person, property investing.
Are you going to buy a house to live in,
No.
or are you going to buy an investment property?
Investment property.
Investment property.
Yeah.
Now, I can always make a case for buying a house to live in the right circumstance. But looking at this, I think we need to make sure that we're on this side of the column if we can be. That's not to say if you bought the house to live in that it isn't an asset. You've got to understand it also is a liability. So guys, put your comments down below. I'd massively appreciate it. Can't wait to hear what you think about all of this. And guys, we'll see you on the next video. Thank you so much. Cheers.